In global equity markets, the day started well. Most indices were up and followed on from yesterday's positive tone. However, things turned negative quickly after the Obama administration announced that they were going to force Chrysler, the automaker, into Chapter 11 bankruptcy. They will then endeavour to set up a merger between Italian automaker Fiat. Chrysler had a deadline of today to restructure the business and debt and come up with a plan to pay back their government bailout, but they weren't able to do so. The news provided a gentle reminder to investors and the global economy that while there are some positives out there, there is still some way to go yet. The big news on Thursday for the New Zealand economy was the announcement from our Reserve Bank that the official cash rate has dropped from 3% to 2.5%. While the drop was not a major surprise, the tone of the message was. It was a U-turn from what Governor Bollard had announced in the March speech. He has now indicated that rates will stay at or below current levels until late 2010, thereby easing any upwards pressure for retail interest rates to climb. Immediately following the announcement, the dollar crashed by close to 1 cent and is now trading at around 56.5 to the US dollar. It may grind lower over the next few weeks, which would be good news for exporters and good news for farmers. However, I still don't think it is totally going to fall out of bed. So what does this OCR drop mean for you as farmers? Well, first off, the currency. My worry over the past few weeks has been that the currency may edge higher even though commodity prices will remain low. Usually these fall into tune, which helps to maintain local prices even though export prices may have fallen. The good news is that the currency dropped immediately after the announcement and could stay a bit lower for a few months. A lower dollar should help to keep local prices fairly healthy. Now, interest rates. Short-term interest rates are likely to ease off a bit over the next week or two. We are unlikely to see the very low long-term interest rates we had about 2 months ago, but the pressure to fix immediately has eased. The tone of Bollard's statement is likely to mean that rates will stay at or just below current levels for some time now. I would be surprised to see the mad rush to fix rates, which happened in March, which forced rates higher very quickly. Overall, the announcement tops a pretty good week for farmers, a higher payout, lower interest rates and a lower currency.